Allow me to introduce you to Trista. So Trista Bridges is a highly regarded advisor and strategic thinker with extensive experience across a broad spectrum of industries, including life sciences, digital technology, financial services, and geographies from Europe to Americas and Asia. She is the principal and co-founder of Read the Air. And I will now hand it over to you, Trista, to explain what Read the Air is and get straight into your talk.
Sure. I actually am having some problems with my video. So it says that I can't start because my host has stopped it. So I don't know if on your side I can mute my video.
Okay, you should be able to start it now, Trista. Go ahead.
Got you. There I am. Hi. Okay, I'd like to actually share my screen if I can to get started, if that's okay.
Sure, definitely.
Share screen. Here we go. Okay. Everybody can see my screen okay? Great. Let's start at the beginning. Okay. So just to introduce myself, hi everyone. Thank you so much for the introduction. Again, Trista. I'm a marketing strategist by training and experience, and more recently I've been focusing on the area and topic of sustainability. And Read the Air is a business that basically works with companies to help them become more sustainable. I was a tech blogger in a past life, and that's why the tech sector is of keen interest to me. And I'm co-author of Leading Sustainably, which is a book that's coming out in July. And one of the areas that we explored in quite a bit of detail in the book is the area of impact investing. And so that's a topic that I will be focusing most of my talk on today. But before we start on that, I really want to delve into why this topic is important. And there's a lot of economic news that's coming out now that's quite troubling. And I think at the moment, it's hard for us to imagine a world where we'll be investing again. But it's imperative, obviously, that we invest in our future. And there's a big question around how we allocate our resources. So everyone is probably familiar that the last 12 years have been particularly tumultuous for everyone. Economies around the world have certainly been upended, societies as well. And a lot of this started, as everyone knows, with the financial crisis in 2008, which was disruptive for many countries, developing and developed alike. I think for developed countries, for us in the Western world, it was particularly traumatic in the sense that we had such a strong belief in the strength of our economic systems, and particularly in Western democracies. And I think that this was really an event that helped disrupt a lot of that thinking and a lot of that sentiment in many of us. And as a result, we've had a lot of challenges since. So although we've had a recovery up until, I guess you could say up until January 2020, it has not been an easy one. And many economists would say that we're still living with the effects of that seminal event. So if you look, for example, at wage growth and wage stagnation, that's been a problem for many years, and then it's just accelerated over the last 10. Millennials, as we know, and also behind them, Generation Z, they have not been able to get into the labor market like previous generations. They have not been able to accumulate wealth in the same way that previous generations have. If we look at income disparity and income inequality, this is a huge problem that is definitely accelerating and getting worse. But there have been some positive outcomes, right? So we've seen a heightened awareness around climate change. We've seen activism, and that's a very positive thing. And a lot of people want to structure a world that is greener, that is focusing more around climate, and they see growth and opportunity in that. On the downside, we've obviously had a lot of political turmoil, and we have leaders that a lot of us are very uncomfortable with and are definitely challenging the systems that we live in. And so you could say that all of us, society, was already fed up. So if we look back at December 2019, which seems a really long time ago, many of us were already tired. And then on top of that, we've added COVID-19. So I have the sense, and I'm sure many people have the sense as well, that the systems that we live in definitely need a change. They definitely need a refresh. And that's a lot of what we're talking about over these 2 days. But I think the interesting thing is that some people, this event has really made them more aware of it. So many people on this call may have read Mark Andreessen's It's Time to Build Peace, which came out, I believe, last week, a couple weeks ago. And the interesting thing about that was that many of the things that he was talking about in that piece, other people have been talking about for years. So I could make an argument, certainly, that the build and the rebuild is already underway. And so if you look at citizens, if you look at activists, if you look at environmentalists, many people have been focusing on these problems for many, many years. And I think that their work has been really important. It's going to be very important for our future. And one group in particular, social entrepreneurs who've been building social ventures, have been keenly focused on many of the issues that we're dealing with COVID today. Now, if you look also at consumers, as I mentioned earlier on, I'm a marketing strategist by training, so I often think about what consumers are thinking and the things that they're looking for. If you look at consumers, they also have a heightened awareness around issues around sustainability, around environmentalism. And one of the things that we're starting to see is that, and what we've been seeing is that consumers are starting to switch and change how they buy. So I'm sure many people on this call are very familiar with things like Impossible Foods or Beyond Meat, and these trends are accelerating. So there was a very good study that came out from the NYU Sustainable Institution and also IRI that essentially said that between 2011 and 2018, roughly 50% of the products and 50% of the growth in that sector, particularly in consumer products, has come from sustainable products. Now, we don't know for sure if these products are sustainable, but we do know is that consumers are relating to them and they're starting to change their behaviors as well. You probably also know about, and you may have heard about, B corporations. And what B corporations are, they've really evolved as a certification standard that many companies are using that we could consider social ventures that focus on blending profit and purpose. And over the last several years, they've come to be known as the reference organization for these types of businesses. And I think it's important to note is that it's not a phenomenon that's resting just within this organization. If you look at Silicon Valley, they've also invested a lot in these organizations. So roughly 120 venture capitalist firms around the world, and particularly in Silicon Valley, have invested more than $2 billion into these companies, and also benefit corporations, which are similar, but are basically under a more of a local governance structure. So what we can see is there is an appetite for investing in these types of ventures with purpose, right? But what we've seen, certainly since COVID happened, is an acceleration in this trend. So there was a very good piece last week, a couple weeks ago in Bloomberg, which basically said that many entrepreneurs are starting to pivot towards social issues and addressing social issues. And this is a really important change, right? Because I think if you look at the tech sector over the last few years, it's really taken a lot of heat in terms of, you think of things about privacy, or you think about the Me Too movement, or if you think about diversity or issues around disruption of sectors and employment in many different sectors around the world. But this is really an opportunity, I think, for the tech community to refocus a little bit, to kind of find new areas to innovate on, and areas that are critically important, certainly to our society. And I think we also should recognize that having this community interested in these issues is incredibly important, right? In terms of helping us to kind of go through and get through the situation that we're currently in and come out on the other side. But there's obviously a challenge that they're going to face. And one of the big challenges is funding. So if you look at this is a really good chart that I found that really explains from the World Bank that kind of explains the situation. So what this basically says is, on the left-hand side, we see all of the money that's gone into private equity funds, and think about private equity here in a kind of a broader sense. So this isn't just venture funds per se, this also is debt equity, those types of funds as well. So what we're seeing is that the large proportion of money has gone into traditional type funds, right? But we have seen some investment in what we call impact funds in recent years, but it's really disproportionately less, so by a pretty huge magnitude. And I just want to explain the difference between these two columns on the right-hand side. So if you look at the one in the middle, this means that a fund is really focused on impact. So they basically say, I want to make sure I have a positive impact, social and or environmental impact. But on the right-hand side, what we see is they do that as well, but what they aim to do is measure it. So they want to actually show, what is my tangible impact on society? In either case, these funds are not huge. There's not a huge amount of them, but they do exist. And we are seeing more of them certainly in the marketplace. But as you can see that these two bars, or these three bars, are definitely out of balance. So what are we seeing? We're starting to see some movement in this sector, and we're definitely starting to see some big names come into this sector. Some people may be familiar with the RISE Fund, which was launched by TPG in 2017. This fund was $2 billion, which at the time, and I think it still holds the title, it's the largest impact fund in the world. And they're actually currently in the process of raising their second fund. And the thing that I think is really interesting about this fund is that, it wasn't just a group of very wealthy and well-known investors. There's also pension funds that are LPs in these funds as well. And that is a signal that those types of institutions are also looking at social and environmental issues as important issues that they need to align around. There's also other private equity funds now that are coming on board with the idea, KKR, Apollo, even at Bain Capital as well. So that is some positive movement in the right direction, I think. And then on the right-hand side, you see a lot of funds that are smaller in size, but not any less important. So these funds, many of them have been in the sector for a long time. Kapoor Capital, which was started by Mitch Kapoor, who started Lotus Notes, it has a fund that's really performed well, certainly since its founding. There's also funds that are focusing on verticals. One that we interviewed actually for the book is called Atlante Capital. They focus on innovation and fashion and apparel. So these funds are incredibly important, and they're starting to grow in number as well. But I think what we know is that, as I said before, there's not enough money coming to these ventures. But these ventures can go to other sources as well, right? So they can go to NGOs, they could go to foundations, they could go to religious institutions. But I think if you talk to people certainly if you talk to people in the Gates Foundation or the Acumen Fund, they would all tell you that we absolutely need business to be involved in helping to fund and helping to support and helping to grow these ventures. Why? Because business has a massive amount of resource and capability that we really can use more to deploy against social challenges and problems. But I think the question that we need to look at is, okay, this is all fine and good. We're definitely seeing some positive movement, and we think that they're important. So how do we do that? How do we actually get growth out of this sector? And why is it important that we do so? What are the things that we need to do? And I just want to talk through some of the things that certainly came up in our research and that we've been thinking about that really can help kind of move the needle on these funds. So the first problem that we saw and we face is that there's still doubt, right, out there that a company can be socially and environmentally responsible, can focus on purpose, and also be very, very profitable as well. And also not just profitable, but can actually lead their sectors and actually bring a much higher return to the investor. This concept is something that's really not widely accepted yet. I think it's growing, and I think people are getting comfortable with the idea, but they're not yet comfortable with it enough to invest in it in a major enough way. But there are some places in the world where these models have really panned out and have really shown to bring about impact and also be very financially interesting as well. So one market which could be considered, I think, the social impact hub of the world is India. So as everybody probably knows, India has a vast amount of social ventures. And one thing that's quite interesting about them, and this was a report that was actually done by McKinsey in recent years, they found that these funds are actually outperforming, these investments are actually outperforming in certain sectors. So if you look at the fintech sector, for example, many people probably know about financial inclusion. Financial inclusion actually has brought very strong returns for many companies. And what they found was that nearly 80% of the exits in the financial inclusion space were in the top 2/3 in terms of performance. So that's a sector where they really have performed strongly. Another sector where they're seeing a lot of positive movement is in clean energy and agriculture. Roughly 50% of the companies that exited in that space also performed similarly, which is encouraging. Two areas that actually have strong connection to COVID-19, which we're seeing that actually didn't perform as strongly, were health and education, interestingly. And I think just in my experience and things that I've seen in my research, those are two areas that are just very difficult to innovate around. There's a lot of regulation. There's a lot of disjointed experiences in terms of, and from an education experience from one location or geography to the next, and it's similar to healthcare. And I think somebody will eventually crack this nut. And there's some really good startups that are starting to look at that, but there's definitely a lot of more work to do there. The next area that we cover in the book as well, and we write about quite extensively, is changing how we think about the investment horizon. So oftentimes, if you look at public markets, so if we kind of step aside from private equity markets for the moment, if you look at public markets, there's actually a very short period of time that someone actually holds an asset. And this has changed pretty substantially over the last 60 years or so. So if you go back to the 50s, it was about 8 years. Now it's about 8 months. And there's a lot of reasons for that, least of not technology, right? So we have, for example, hedge funds. We have automatic trading. We have lots of things that have accelerated that trend. But this is something that people are starting to question, including companies are starting to question of all sizes. What should be our horizon in terms of looking for a return, in terms of how we invest? Should we be taking a longer term view? And certainly private equity funds hold their assets for a much longer period of time. But in some sectors, the case is, the reality is that it may take a longer time to invest them. So that's something that I think is going to be a challenge to change, but something that I think we need to have another thought about. Then we also just need more impact funds. And why do we need more impact funds? Because firstly, they have expertise, and expertise in this space is incredibly important. Why? Because not only do you need to achieve the returns for your LPs and to make sure that your fund performs at a certain level, but you also need to bring the impact, social impact and return as well. And one area that is really important to doing that is measurement. And there's very few people out there who really have a good understanding of how we measure social impact. I certainly don't claim to be an expert on that either, but there are many, many experts around that space. Not as many, perhaps, as we will need eventually, but there's a lot of people who've been working a long time to try to figure this out. One of the people we interviewed in the book, who actually was a previous professor of mine, his name was Jed Emerson, and he's done work since the 90s around this concept. More recently, we've seen out of the RISE fund that I mentioned a bit earlier, something called Y Analytics, and Y Analytics has come up with a really interesting metric called the impact multiple of money. And that really helps to put a financial number on social impact, social and environmental impact. And so for their fund, they've actually set a bar of making sure that for every $1 they invest, they get $2.50 equivalent of impact return back, in IMM back, that you would say. So it's really important, I think, to make sure that we have people working with these types of companies who understand how to measure social impact. The next area is really appetite for risk. And I think this is something as well. I've heard from some social impact investors that sometimes people in other funds kind of send deals over to them because they don't necessarily feel comfortable. They don't feel that they're aligned with the mission of their funds. And they think it's important for them to work with a fund that has an appetite for that social risk. And that's a reality, certainly, that we have to deal with. And then the last area I would say is connections, making sure that that when deals are done, that there's a good consortium of people that can come into that particular deal. And in a social venture, that might be much broader, for example, than it might be for a traditional type of startup. So it's important to have those connections. This is one area, for example, in Japan that definitely needs a lot of work. And I'm fortunate to be working with some very smart impact investors here to work on a platform to help bring deals to investors here in Japan. And that's something that's in the works, because having deals of a certain scale and size is also a very important aspect as well. Then I'd say the last couple of things that I would say in terms of things that we really need to have a bit of think about are thinking about who can actually be an impact investor, right? So currently, as we all know, there are restrictions around who can actually enter a deal, right? So whether it be into a fund as an LP or whether it be investing in a startup. And there is some movement. So for example, in the US, the SEC had a concept paper last year that they put out on this, and they're starting to think about this. The EU is starting to think about this, but I think we need to ask ourselves if we really need to rebuild our economies, if we really need to focus on these rebuild ventures, as I mentioned, and the title of this talk. Does this really make sense to continue to do? I understand the logic of protecting the investor, but at some point we need to ask if this is the right way forward. Because for example, we've been talking obviously about epidemiologists. Does it make sense if someone's an epidemiologist, they're making $120,000 a year, but they don't have a lot in assets, but they really have a lot of expertise and connections, to not give them that access? I think that's something that we also need to reflect on as well. And then the last two areas that I would say that we need to definitely focus on are making sure that when these ventures are in their young stages, that they have the support that we have elsewhere in the tech ecosystem. So there's a lot of really good accelerators out there for impact. There's probably not as many as there need to be. So I'm talking about things like accelerators, angel networks, early and seed stage funds, startup competitions, all these things that sometimes seem a little bit overdone, but actually are really important in terms of building incitement, bringing new people perhaps in the sector who wouldn't have participated before, and making sure that they get access to cash and access to funding at an early stage. And then lastly, I would say that one of the other things that we want to consider is the role of government. And I think this is a very difficult discussion generally for us to have. As I mentioned earlier in the talk, we have a lot of skepticism around government and government's role. But I think that we need to think in growing the amount of money and funding and attention that comes to dealing with social issues, what the government's role should be. So should they be helping us come up with schemes or ways to get more people into the market? Should they be coming up with ways to help create tax incentives, for example, to bring more funding to social ventures? I think that's an important point as well. And finally, I would say that this is actually an ecosystem that does exist. So I'm very happy and proud when we wrote this book to have spoken with many of the companies on this page. And they focus on all types of different areas within the ecosystem. I would say that if anyone wants to learn more about this space, certainly starting with the Global Impact Investing Network is a great place to start. But there's a lot to build on. So, if we're talking about it's time to build or it's time to rebuild, we definitely have a good foundation to build on. That's it.
Great. Thank you so much, Trista. It's really insightful. I was actually quite surprised with how little impact investing funds there were. Like that table that you shared earlier was quite, I guess, I had no idea. I thought that there was enough impact investing.
I should say there are more than those, and I should have said they're a snapshot of funds, but certainly that bar chart, when you see the disparity, it is quite stark.
Mm-hmm. And then this ecosystem here, is this, is it region specific, or is it just, this is like a global ecosystem, or is it like in Europe, or?
That's a good question. So it's definitely global, but it tends to have much stronger regional flavor. So for example, when you see the networks at the bottom, we have the European Venture Philanthropy Association, we have the Asian Venture Philanthropy Association, we have Nexus, which is based in the US, Tonic, which is based in the US, SSIF, which is based here in Japan. So, there's definitely strong regional networks, growing regional networks. Some of them are a bit more nascent than others, but there's definitely opportunity to grow them, but they do try to foster connection between them as well.
Cool. Great. So we've got a question from Robert Kelly.
Sure. Hi,
Robert. You there?
Is he going to ask it directly?
Hi, Trista. Can you hear me?
Yeah, I can hear you. Yeah.
Oh, perfect.
How are you doing?
Hey, great presentation. I was really, because there was a question that I've been waiting the whole time, and I was really glad that you raised it in your last point, which has to do with the role of government. Mm-hmm. And I wanted to know if you had any specific sort of policy recommendations for governments in order to make I guess it's kind of like, what's the division of labor between the policy that a government can do, and then how that best impacts or best allows impact investments and organizations to do what they do best. Is there a best practice out there? That kind of thing.
That's a good question. I didn't really run across one, to be honest, but I think there is something around allowing more people to participate in the investment itself. I think that's going to make a sizable difference for the sector. And I think the thing that's a bit of a concern for me is that if we don't have enough funds out there, the money has to come from somewhere. And there are places, for example, like Japan, where households have a massive amount of cash, frankly. And I know other Asian economies probably have a similar dynamic where people may be reluctant to put their money into certain things, and they basically save. They're big savers. there's got to be a way to kind of get that cash to the startups that need them. And I think particularly if there's, and I talked earlier in my talk about the social consciousness of the public. I think if these are topics that the public cares about, they probably are topics that the public will invest in. Now, I think in the short term, that's very difficult, right? Because the short term, we're all hurting. But I think that government as a first step can do a lot to loosen up the ability to for us to reallocate resources to these startups.
Great, thanks. Thanks for that question, Robert.
Sure.
Are there any other questions?
Sure, I have a question.
Yeah.
In terms of the areas where impact investing is, like, what areas do you see as the most urgent? You know, setting aside the obvious, current urgencies, but had we not had this crisis, what industries or what areas do you think are most? Well, I guess there's two things, like where there's most impact investment needed, and where it's overlapping that with perhaps where it's harder to get or impact investing. Can you give us a sense of like what that landscape?
I think you would definitely say that those who are kind of really dealing with social issues, unemployment, for example, or childcare, those are definitely areas where there's a dramatic amount of underinvestment. I think that, and they struggle to raise funding versus something like food, right? In the food space, we've seen a lot of, arguably we call them impact or social enterprises in that space that have raised a lot of capital, right? So I think if you're looking at purely social type things, it is absolutely a real challenge. But I think that one area that I would definitely say where we need to have funding, and this was touched upon yesterday, and I've done a lot of work in that space actually on the marketing strategy side of things, is certainly in healthcare, and certainly in getting healthcare to people who can't afford it. There's still a huge access problem in many places in the world. And it's clear we have a lot of NGOs and foundations that are dealing with this issue, but it's clear that there's still a pretty big gap. There's actually a startup here in Japan that deals with administration of short medical treatments to people in public spaces, right? So now we're not doing as much of that, obviously, but in train stations, right? They may have a health issue and they can go to a kiosk and they can kind of quickly get some medical care. So I think that there's definitely some models out there, but I would say healthcare, and it's not just because we're in the midst of a COVID crisis, but if we don't have a healthy population, it's hard to have a productive population. So for me, there's lots of things that we can do. Things like, for example, cheaper diagnostics, ability for us to kind of diagnose problems in people much quicker and much more cheaply. I think that's something as well that really does need a lot of investment as well.
Okay, thank you.
Any other questions? Oh, there's another hand raised. Yeah. Daniel.
Great, thank you so much for the presentation. I was wondering, you focus a lot on new ventures and on new initiatives, but there's also large existing companies that are trying to move or pivot a little bit or a part of their business towards more responsible goals or responsible processes. Do you think that the dynamics there are different, or would you say the same considerations apply? I was thinking more about, for instance, measurement. How does measurement of the impact work if the company is 98% traditional and 2% in a little corner they're trying to do something? And how do you distinguish that from trying to greenwash a big corporation, right?
Yeah, absolutely. I think that that's a very good question. Actually, in the book, we focus a bit on this topic of new ventures, but we focus a lot on established companies. And that's a lot of the work that we're doing around. I think that the challenge there, you're absolutely right. It is very difficult for a big corporation to change, but, or established corporation or a company that's been around a long time, even a smaller business, but it is possible. And there's a lot of very, very, very good examples out there. But it does require some metrics and rigorous processes to put in place. So for example, one of the things that we feel is really important is when we make a strategic decision, right? We need to look at impact metrics as well. And I talked a little bit about B Corporation earlier on, and they have a whole framework of metrics that any company can use. They're completely open for everyone, that you can go into and you can take a look at your business and you can evaluate your business amongst all of these criteria, right? So there are frameworks that are in place that are out there, but it's important, I think, to kind of go about looking at that in a rigorous way, and also to start with portions of your business, right? So say you have an activity that's in a particular market or particular area, it's important to start with that first, and then you can expand it throughout the organization. But there are frameworks out there, and I think the B Corp one is a great one. It's also free, and I definitely encourage companies to use it and take a look at it, and certainly to reach out to organizations such as that if there's pieces or parts of that that are unclear.
Great, thank you very much.
You're welcome.
Great, thank you. Any other questions? I've got one more. So,
sure, of course.
Trista, you're saying, it's time for, not just the current impact investing firms to like rebuild. It's also for, the venture capital firms right now and other funds right now to consider, social responsible investing. Like, are there any efforts, or is there anything being done to encourage, I guess, more of the funds that haven't really been investing in this in kind of social impact projects?
Yes, there's actually, I would say, a little bit of a social pressure and market driver as well, which is, you've probably heard a little bit about the ESG movement, which is environmental, social, and governance factors that are used to analyze in public markets, to analyze what's going on with companies, right? And so at the beginning of that movement, they were very basic things, right? How much are you emitting in terms of your carbon emissions? How much water are you using? And it was really a reporting metric. And what's happened over time is it's become a metric more to see if the company is a good company. And so it's a very active movement in the public markets. And what's happening is it's coming over to the private markets as well. So that means that if a private equity fund, we're starting to see more private equity funds adopting ESG criteria. If we see a private equity fund adopting these, that means that they need to integrate it into other things as well. They need to integrate it into how they allocate capital. They need to integrate it into their investment decisions. And so that's actually going to be a bit of a catalyst for them to put their money into some of these investments. And I don't think that they necessarily need to go it alone. I don't think that these funds that are established need to pivot entirely towards impact investing. But they can certainly participate in some deals, and there might be deals where it makes sense for them to partner with impact funds or others to get those deals done.
Then would you say then what's happening right now is almost an opportunity, right? Like,
yes, it is.
Even though
so today, everybody probably knows, especially in Europe and the States as well, there's been some horrible economic data that's come out, right? So it's clear, there's a panel later about VC firms and kind of how they're dealing with all of this. And I'm sure there's going to be a pullback. I'm sure that there's going to be a situation where startups are just not getting funding for periods of time, and people who are trying to raise funds are going to struggle. But we're going to come out of it. And the question is how we come out of it. Do we come out of it with a model that's better balanced, where, at least, the impact funds are getting not necessarily 5% or 10%, they're maybe getting 30 or 40. That would make a market difference in terms of dealing with a lot of the issues that we're facing.
Yeah, that's interesting. Robert, you've got another question?
Yeah, Trista, I was wondering if you could just share a little bit from your perspective in marketing strategy, some of the challenges that this field faces in terms of marketing, and some of the opportunities that they have to improve.
Yeah, absolutely. I'd say the first one is, I'm going to come back to measurement quickly, because when you look at measurement and how it's done, it's not easy. So I talked about Y analytics earlier, and they did this really great paper in the Harvard Business Review, but it's a very long paper, and it's a very long explanation of how you do their analysis. And I have no doubt it's very good, and it's very robust. But the challenge is that getting to understand that impact is not an easy thing to do, which means that it may be difficult to replicate, right? So as we know, if we look at kind of traditional things like EBITDA or ROI or IRR, we know how to calculate these things, right? We all go to business school and we learn these things, and anyone can kind of do it, right? But I think the way we measure impact and the way that we measure social impact is not standardized. And that's an absolute barrier. We don't have quick messages around that yet. And I think that that's a real challenge. I think another thing as well is, how we open it up to away from people who have been in this space for a really long time and are really true believers. How do we come up with quick messages and ways to convince people maybe who aren't on board, who don't believe, as I said, that a company can be extremely profitable and can bring interesting returns and strong returns to their investors and also do good in society. I don't think we necessarily have a good sales story around that yet. In the same way. And again, I haven't worked in this sector for 20 years and I'm kind of new to it myself in some ways. But I think that we can do a lot more to kind of sharpen the message as well. And I think the last piece, as I talked about the general public and getting them involved, I think the general public is really not aware at all. I think they know they want something better. I think, that they want to be doing something better with their money. They are starting to move into public markets to more if you look at mutual funds that have ESG focus, they're starting to grow and they're starting to perform very well, actually. But they're not necessarily aware, I think, of this sector. And I think awareness is really important. So there's a lot of work to do to generate awareness around this sector. And I think sharpen the message about the power of this space.
Thank you.
You're welcome.
Great, thanks for that.
You're welcome.
I guess
have
we
another
don't.
question.
Oh, yep.
Yes.
So with regards to marketing and perception, in impact investing field, like this is a field that I know very little, but I do know some of the activism community. And, I wonder if those two kind of overlap, and from an investment perspective, if I know the activism communities sometimes have, it's sometimes hard for them to properly market themselves, or to properly market their causes without this kind of extremist
alienating
view that
people.
they sometimes carry. And I wonder how if that also has an impact on how these causes are able to market themselves to funds and sort of move the cause forward. And is that something that we should take into account, or is that totally out of scope?
No, I think that I would say that, first of all, it probably depends on the sector that the venture is in. So I think if you look at, like I was saying before, if you look at the food sector, I think that's become much more normalized. And I think everybody believes this meat alternative direction, for example, is a real opportunity, right? Not only is it good for the planet, it's probably good for our health, but we're not 100% sure. But you can also make a lot of money off of it. I think that one is absolutely fine. But I think that there's, I think that you do raise a good point in that, when people work around a social issue, they really believe in it. And sometimes they believe in it so much where it's difficult for them to separate themselves from it. But we have seen, I would say in the NGO world, a big change in this, right? So if you look at an organization like the WWF, which you probably are aware of, this organization over years has really moved more towards seeing business as a partner. And they've really shifted their message in terms of saying, what we're doing, and we're going to kind of help bring other people along, right? So I think that they are actually an interesting, if you're looking at a parallel, they're really an interesting organization because they really have changed their message. If you look at their message versus maybe 15, 20 years ago, it is quite different. I think Greenpeace is another one as well that's changed, where you could say that's the activist community. And they really have worked, I think, to bring more people into their movements, and also to kind of partner with business a little bit more, to kind of achieve more of a common objective. Because I think the realization is that if business doesn't come on board with any of this, then nothing will substantively change. So I think that there are examples. I don't think it's a bad parallel at all. There are examples that can certainly be drawn from in the NGO and activist space.
Great, thank you for that.
You're welcome.
Insightful. I'm learning so much about impact investing, and really exciting to see, what will come out of this season as well, and hopefully it will be for the better.
Absolutely.
Yeah, I guess there's no other questions. Is there anything else you wanted to add, Trista?
No, I think the thing that I would add is that I do hope that people will start to read up on this sector a bit more. And I think, understanding and learning that businesses can, the idea of purpose and profit can be melded together and can coexist. And I think that if we want to reimagine another future, another world, then it's really important that we believe in this idea and this concept. And I think when we see companies that are sustainable and we see companies that are doing this, we need to support them, right? So we need to use their products and services. And I think that's something that's very simple that all of us can do. And, we have choices also as consumers as well in terms of the products that we support and the products that we buy. So that's something I think that's very easy for people to do.
Yeah, I mean, are there any, like, just off the top of your mind, the ones that you are supporting, or like any companies that you could kind of share that we would know?
Yeah, so actually in my book, I profiled, we had a section in the book that was called Mission Driven. And what we did is we highlighted companies that were sustainable from the start. I think that if you look at, and also I'm not living in the United States, I'm living in Tokyo, which is a little bit different. One of the things that I'm trying to do here more is certainly buy from local farms. And I think that's that's something that's happening everywhere. And I think when you see the problems that we're seeing in the food system with COVID-19, I think we all should consider that direction and looking for ways to really support local farmers. And that's something that I'm definitely aiming to do. And then another thing, another company that I really like that we profiled as well, there's a company called Keen, which a lot of people know is a footwear company. They're doing incredible things and they've been doing it for a long time. And one thing that's very interesting about them as well is that they encourage activism in their workplace. And I think that's a huge difference for particularly an American company, because in American companies, we tend not to want to do that, right? We don't really want people being political in the workplace, but they feel it's important. So they have a booth in their office where people can basically contact their congressman, for example. I think that's really important. They also focus on conservationism. So there's some great brands out there. I mean, obviously everybody knows Patagonia and Ben & Jerry's, and everybody knows, many, many companies that have been in this space for a very long time.
Yeah, that's really interesting. I mean, yeah, thanks for the encouragement. I think, yeah, definitely supporting local, even just, supporting the local farmers in the UK as well. Is something that I definitely will want to do after this. So yeah, cool. And so this talk will, if anyone's just tuning in, it'll be live on YouTube. It'll be on YouTube to rewatch. And yeah, it'd be great, Trista, if you could share any other resources. We can share that with the community on where to even read up on this and kind of understand more about impact investing.
Absolutely, happy to.
Since we have a few more minutes before our next speaker, I was wondering if, since you're in Japan and we haven't had anybody from Japan yesterday, if you could share a little bit of the situation there. And I heard there's a second wave now. Can you share a bit of that with us?
It's very interesting. So as everybody knows, in Japan back in February, we had the Diamond Princess incident. And the Diamond Princess incident was I think it was a bit of a shock for Japan. I think in the midst of all the challenges of dealing with a boat full of sick people, I think Japan actually handled it reasonably well. It seemed at the time that it was a bit chaotic, but looking back now, on hindsight makes you see things very differently. But a lot of, there were certainly deaths from the ship, but people got health care. They got off the boat eventually and they were able to get proper health care. And I think that was a good thing. But the Olympics were definitely in Japan a bit of a problem, because it's pretty clear that there was a reluctance on behalf of Japan to want to show any problems. So our testing rates here are very low, and they still are very low. There was a strategy, a cluster strategy that they called it, which is where they really tried to identify the clusters quickly and to contain it and to get rid of it. And for a while, this seemed to be working. But then coincidentally, the day after the Olympics were announced, the cases started to explode. Yes, there aren't as many as we're seeing, certainly in Western Europe and certainly in the situation in the US, but this has been quite shocking for the Japanese people. We now are kind of on a bit of a lockdown, but you have to remember that in Japan, there's some legal restrictions around being able to do a lockdown like you have in other countries. And there's a lot of reasons for that. And one of the reasons is that the Constitution actually precludes certain types of, it doesn't specifically say you can't have a lockdown, but it does have a pretty strong human rights principle. And this is one of the longest and oldest constitutions in the world that was written after World War II, and that was written with a great deal of help from the United States. So there are a lot of good reasons it was that way, but it does constrain Japan from having lockdowns, for example, like we would see elsewhere. So what we see is that people really do try to, they've been encouraging people to reduce their contacts by 80%. We are now in Golden Week, and Golden Week is a period of time when people tend to travel. Everybody's pretty much stayed here, but people are laying low, and we have a state of emergency, and we're supposed to come out of that on May 6th. But it's been a very different experience here than I think that we've seen certainly in other countries.
I mean, is everyone kind of working from home, even though there's no like?
That's another very good
lockdown?
Question. No. So
Really?
now everybody's a Golden Week, but you have to understand that culturally, it's quite difficult for people to work from home in Japan. There's cultural reasons for that. There's structural reasons for that. So the trains, for example, I've fortunately been able to work from home, but the trains have been packed, right? They were packed for a period of time during work hours, right? Not off hours, there's nobody in them, but during work hours, a lot of people still had to go to work. And there's a lot around, we talked about, Sebastian, you asked about kind of work culture and changes coming to work culture. Japan is certainly a place where I think this is going to have a profound impact on people's work and how they're working, because a lot of companies have been pushing for remote work. And so one of the things the government's doing now is actually offering aid for people to convert their offices and prepare their organizations for remote work, because I think they project that there's probably going to be a long period of time where we're dealing with the challenges around COVID-19 here.
And what about like the situation with wearing masks when you're out and about, and like, you know,
Yes.
I guess, I mean, I've only been to Japan twice, but I guess they're quite clean there. I don't know. I mean, what's it like over there?
It's not perfectly clean, but yes, it's cleaner than a lot of other places. But wearing a mask is people here just wear a mask in due course. And the reason they always wore a mask is that it's impolite to be sick and giving that illness to someone else. You see what I mean? So, you know, when I go back to France, I go back to France sometimes as well, because I still, you know, have an apartment there. And, you know, people think it's weird. They think you wear a mask when you're sick. But here, you know, you also wear a mask to protect other people. So everybody has on masks. And when people don't have on masks, people kind of look at them like, why aren't you wearing a mask? Kind of thing.
Yeah, that's really interesting, because I mean, I'm aware, like, you know, in Singapore, when SARS hit Singapore like years ago, you know, everyone, I mean, I think Asian countries, I don't want to generalize here, but like, let's say Singapore, Hong Kong, everyone was just like quick to just wear masks. But I think here people are quite shocked. I mean, my friends in Singapore are shocked to see that us out and about here in London. Like, we're not out and about, but even when we're like going out to the shops, like, not everyone wears a mask.
Yeah.
And there's not that, like, I don't know, there's no instruction too, so
Yeah.
it's interesting.
I've become a mask believer.
Yeah. Sorry, Seb, I see you talking.
It's been also interesting to see the change in perception around masks here. So in early March, I went to Germany and came back to France, and immediately went to a pharmacy to buy masks, and started wearing masks in the metro, because I was still commuting a little bit then. And I got so many like scoffy looks from people, and like people kind of murmuring under their breaths to, you know, to their friends, like, what's wrong with this person? This was in March, you know, mind you, when Italy was already, you know, in a pretty bad state. And, you know, I live out in the suburbs. When I go outside, if I'm not going to a supermarket or something, I don't wear a mask. There's enough space and everything. I'm not concerned about infecting anyone. Also, I've been in confinement for a while, so I'm pretty confident there. But maybe I should. But anyway, at some point I'll need to, I suppose. But and the other day I was walking down the street and this woman, like stops me and is like, "Why aren't you wearing a mask?" Like, like perceptions just widely changed based on, on like public opinion, but also I think, the message from the government here in France has been very,
wear a mask,
with regards to masks, and it's causing a lot of distrust and just misunderstanding of the situation. Of course, like everybody should be wearing a mask all the time. There are obviously like supply chain issues and
yes, that's an issue too. We haven't been able to get masks here it's hard to find them. You get them at certain hours. It's hard to find them. It's been that way for months. So it's a big challenge.
Yeah. Well, thank you.
You're welcome.
Thank you.
For being with us. I know it's very late there in Japan. So.
Oh, it's okay. Great. Thanks so much.
Cheers.
Thank you.